Real variety for your workday.
All right. Variety. I love variety. Like going to a smorgasbord. All you can eat. They got a bunch of crap there. Variety.
Real variety for your workday.
Yes, okay. Welcome to Top Step TV. Yes, it is Tuesday. We say in Chicago, it's Tuesday, eh? But anyway, I'm glad that you made it here today. I'm glad that I've got my buddy Johnny Hoagland right next to me. So we've got a great day for you today. Jack, keep pointing the wrong way. John, can you move over to this side? I'll pop you. All right. He's Fraser Thomas. I'm Garfield Goose, and welcome to another exciting episode of Tradertainment, Trader Education, drama, car chases, stunts, everything wrapped into one. And let's get busy here. Say hello to my good friend. Your good friend also, the good guy, the handsome guy, our dude with the plan, John, a.k.a. the Hoagland. Good morning, Johnny.
Good morning, Eddie. Good morning, everyone. Happy Tuesday, October the 8th. October 8th, a special day in my family. It's my older brother Rick's birthday. Some of you may remember him. He used to come into the market prep every morning. He's been around here a little bit on Top Step TV again. So, Rick, if you are watching, happy birthday. But as always, our focus in this is accurate context, good risk management, and patience. Good morning to all of you. Top of the chat, Command, I call you Command 88. It's 86 and 2. Nick Nichols, good morning. Pete, Mike, Dan, Eddie's Bong, John Jones, Anastasios, C. Walsh, Adrian, good morning. Grounded Gamer, Frizzo, and KG. Good to see everybody, and welcome to all of you. It's great to see everyone this morning.
Great. And like you said, happy birthday to your brother. I haven't seen him in a while.
Happy birthday!
And I hope he joins us again.
Yeah.
But let's get down to our news now. U.S. stock futures sort of hovering around the flat line earlier today, but we got some more movement here. Investors watching that outlook for the Federal Reserve interest rate easing ahead of the upcoming inflation data and corporate earnings. We did see the Dow up 0.1%, S&P, we're moving here, but anyway, 3.36% up, and the NASDAQ was up 0.4. Now, these main averages on Wall Street fell in the prior session. Some traders are backing away from bets that the Fed can lower borrowing costs at its next meeting in November, following the big one they did last month in September. Now, instead of the second straight 50 basis points, the reduction, markets are now anticipating that the bank's going to do a more traditional quarter-point drawdown. And this is coming from the Fed Watch tool, and maybe Jack a little later on can pull that up and show what they're looking at. So we'll keep that in mind. Also, the Fed's current policy is now really well positioned. This is coming from John Williams, New York Fed president. So he says, hopefully supports ongoing strength in the world's largest economy. He says that the job rates are at a level that are hopefully going to stay at that level. So we'll keep an eye on that. We got that coming up here this week. Google. Alphabet's Google's been ordered by a U.S. judge to reconfigure its Android operating system due to the rivals to make their own app marketplace. So this really came after Fortnite maker Epic Games had a shit fit and complained, took it to court, and now Google needs to take a few steps back. Chinese markets rose sharply today as trade resumed. Yeah, they've been off for a week. They call it the Golden Week holiday. Yeah, this is where everybody gets an ounce of gold. I don't know what they do there, but if you do, share it with us. What do you do on Golden Week? Shanghai, I don't know what they do. It's for a whole week. The Shanghai Composite rose check this out. It went 4% higher, 6% higher. And as they opened up, it even went as high as 13% higher on the day. So that's what I got. Thank you, investing.com. And Johnny, what do you got?
All right. As far as economic numbers today, the trade balance came out. It actually turned out to be the narrowest trade deficit in 5 months, dropping from 78.9 billion, which was an adjusted a little bit higher, to 70.43 billion. They were looking for 70.5 billion. So trade balance narrowing a little bit. At 7:55, the Red Book came out. 11:45. One of the talking Feds, Bostic, is due to speak at noon. Of course, there is a 3-year note auction, and at 3 o'clock, Collins is due to speak. So not a lot of heavy economic data, known economic data due out today. As far as earnings are concerned, PepsiCo came out this morning, beating us on earnings per share, but missing a little bit on revenues. VIX 22 this morning, actually down about 3% after yesterday's downside move, but higher than this point yesterday, which was at 20.99. Dollar index 102.48 hasn't moved since yesterday. That's exactly where it was this morning last I checked. Yesterday morning, the yield on the 10-year still rising, 4.045%, up a little bit this morning, 4.01 at this point yesterday. And that is really it as far as known economic numbers for the day. Eddie, back to you.
Back to me. Well, Earl prices, we did see them falling here, 75.15, hitting the bottom right now. Last trade 75.51, topping out at 76.18. And there are concerns that this all-out war in the Middle East will hit supplies. Once again, crude, a very fragile market at this point. It's always been very fragile. Also, some reactions to the comments from the state economic planner in China, also weighing on crude. We did see the Brent slip 1.4% and WTI lower 1.5%. Both contracts rose 3% yesterday to their highest levels since late August. Last week's rally, 8%, biggest weekly gain in over a year. We're almost done with the year here. So keep that in mind. But all right, that is my crude. And if we can, James, you got tip of the week. Continuous learning. I've learned all I needed to learn, Johnny, in trading. Why do I need more?
No, you haven't.
I haven't? Well, tell me about this. What do you mean?
You're always going to be learning and trading. Markets are always changing. And I kind of think that's a good idea in anything in your life. You know, it seems to me if you stop learning, you stop living. So always be learning. Continuous change is occurring in the markets. Continuous change is occurring within you. Always be learning about markets and even more importantly, more about yourself.
I like that one. John, I'm going to take your advice and I'm going to keep learning. Thank you very much. Do that. Hey, we've got guest Rip's going to be joining us at Selling Rips on Twitter. If you'd like to check that out. He did well at the poker tables over the weekend. Took the day off from his trading, live trading yesterday. And coming up here, Fast Markets also coached Dakota, star of Slow Markets. And he made some money in his live funded account yesterday. And yes, he's still a Packer fan. But otherwise, let's get to these charts and see what Johnny's, crude, just fell out of bed. How far did we fall? You kids okay? All right. All the way to 74.61. Wow. Anything over the wire here? Probably the, keep an eye on that. I'll take a look, and Johnny's going to run in the charts. Johnny, what do you got?
All right. Yeah, we'll take a look at that shortly here. As always, I like to start with the daily and the E-mini S&Ps. And as we look at this daily chart, we see that the market is still largely in balance and just kind of bouncing back and forth between some relatively known highs and lows. We've got last week's high, last week's low, weekly kickoff high, 58.30, last week's low, 57.24, and the weekly kickoff low at 5,700. Yesterday, we had some lower volume and we dropped about 12,000 in open interest. So that I think is indicating to me what consolidation is meant to do. It is meant to even out inventories. Sometimes if the market gets a little bit too long in certain time frames, a pullback is necessary. And the opposite is true if the market continues to push lower too fast. Sometimes you're going to need a consolidation or a pullback in order to even out those inventories. And I believe the market is doing a very good job of evening inventories over the last couple of weeks. We haven't seen a lot of longer time frame participation, big jumps in open interest and big jumps in volume at any real important times here. So looking at where price is now, price is very centrally located inside that balance. We're going to be looking for short time frame levels unless something changes. Of course, ACH, anything can happen if something unknown comes into the marketplace. That's going to kind of change my idea of looking at short time frame levels for opportunities. These markets, the equities markets, are, and I believe gold is also awaiting new information. We do have the CPI and PPI numbers at the end of the week. Those are likely to be the most impactful numbers of the week. So taking a look now at the 30-minute chart, had some good opportunities yesterday based off of some shorter time frame information. As far as where we are today, overnight inventory is long. We are holding above settlement. That does create a settlement gap, but there is no session gap being created if we're to open right where we are right now. Let me bring this up a little bit so we get some of these levels in the right spots. All right. Yesterday, we looked at the initial late spike yesterday as an opportunity for an execution. And boy, did it really kind of provide the best trade location of the day. It took forever yesterday for this market to choose a direction, but I think that the short time frame level of the initial late spike base from Friday was really a good level for us to look for a potential opportunity. And again, it took 2-3 hours, 4 hours for this market to really choose a direction, and that direction was to the downside. So we are looking at a market that is possibly opening in a kind of a pickle here. We've got all that. We've got the 50, the 100 session, and the 200 session moving average braiding over time. They're all in play today. We just put in our overnight high a little while ago, right up against the 100 session moving average. The 200 and the 50 session moving average are hovering just below. What is this market saying? Well, it's saying it's looking for more information. And with the double distribution trend day that we put in the session yesterday, we're opening in the middle of the upper distribution of time and volume and the lower distribution of time and volume, which creates the possibility of a repair day, an inside day from the range from yesterday, putting a low somewhere near a point of control in the lower distribution. Let's just call that settlement. It's 57.4475. And the point of control, the volume point of control in the upper distribution, let's just call that 57.78 quarter. Anything in the middle of that, I'm not really interested in getting that involved in. And of course, another test of the initial big spike base or the late spike base above that could offer opportunities as well. We've tested down to the naked point of control that we were targeting yesterday. We've got last week's low was really kind of putting in the overnight low. So if we do approach the overnight low, I would say that that's going to take some sort of information or change for that to happen. We never know. Again, the profile yesterday, double distribution trend day to the downside with the potential for repair. Let's take a look at the NASDAQ now. All righty. Very similar situation. Obviously, we are in balance in the shorter time frame. The lower volume and the loss of open interest yesterday of about 5,300 contracts indicates that the market is doing what it's supposed to do in consolidation. It is evening out inventory. It's getting longer time frame traders just kind of hedged the way they want to be. It's getting shorter time frame traders indecisive and with smaller positions. That's going to bring power to these markets when a decision or a direction is chosen. The market won't be too long to continue the move to the upside if the leg is to the upside, and if the next leg happens to be to the downside, the market won't be too short upon the breakout. Remember, we're trading balance to breakout rules. We're fading the extremes of the area of balance, and if we do accept outside of balance, the idea is to go with the breakout outside of balance. But again, very centrally located as far as price is concerned. These markets are seeking new information, and some of that information may come in CPI and PPI later on this week. A lot of focus is going to be on those numbers and how inflation is being handled by the lower interest rates, most recent lower interest rates. Even yesterday in the NASDAQ, NVIDIA couldn't save it from a lower day. NVIDIA was very strong yesterday, and the NASDAQ just continued to push